Hello, Theo traders. Gianni DePoce here with you today. It is the 19th of December, 2023. And as we conclude the last few trading sessions of the year, I want to take a few minutes today to review some of the market moving sectors. So it seems, aside from just technology, we continue to see big moves in the AI space, in crypto related markets, and even in precious metals. So I want to start off by doing a rundown of the S&P 500. As you can see here, on the 19th, we are rallying once again to a new multi-month high. If we go ahead and zoom out and look at the continuous futures contract, we finally rallied to a new all-time high in the S&P 500. That is a bullish signal. We want to see higher highs and higher lows. And as the saying goes, the trend is your friend. The trend is your friend, of course, until the trend ends. And as of right now, there doesn't seem to be any indication that the trend is ending. Now, if we go ahead and pivot over to the Nasdaq, we'll see that it's lagging the S&P 500 a little bit today, but it does look to be in the early stages of a breakout, especially considering the pivot that we saw from Fed Chair Powell last week. Now, this is something we discussed at length in the TheoTRADE chat room, talking about how the market was pricing in rate cuts pretty early next year, and more than one, if that. And we finally got confirmation from the chairman of the central bank last week, and markets reacted positively on the news. Not just on that front, but we continue to see bids continuing in the bond market. ZB has been leading the way higher. In other words, duration continues to outperform to the upside, which is a risk-on signal in of itself when it comes to the bond markets. Now, this begs the question, how much will the Fed have to cut interest rates on the short end of the curve in order to get a re-steepened yield curve? Because now, as we continue to see bonds bid on the long end of the yield curve, what that's doing is reinverting and bringing the yield curve deeper into negative territory. So a bit of caution, as everyone seems to be cheering the Fed pivot and everything is awesome and equities are at all-time highs. There's nothing to worry about. I actually beg to differ a little bit. I am pretty optimistic and positive on the prospects for equity market performance going into the first quarter of next year, but really not having high expectations for anything after that, especially when you consider the duration of the yield curve inversion. It's been inverted for so long, the longest in history now, as a matter of fact. I think we need to be cautious, perhaps by this time next year, of the economy actually being in a recession. That doesn't mean that stock prices will be down next year significantly, but we could see a significant episode of volatility in 2024 where we see a 10 to 20% correction in stocks. We could still end the year higher than where we started, but I think next year, despite the Fed set to increase liquidity in the marketplace, I think we have to be alert for a correction of significance. So let's go ahead and jump over to some AI names that we've been looking at in chat. You have C3.ai. It's getting really close to clearing what appears to be a rounding bottom formation. We've been, looking at a lot of these AI names, and obviously that's been a main driver of upside rallies in a lot of the Magnificent Seven. Amazon, Google, Apple, Microsoft, all these names. AI is the new buzzword, or the buzz letters, if you want to call it that. That seems to induce powerful market rallies. So, there are smaller companies out there that are more concentrated and focused on this space. And going into 2024, I think this could be a major theme, especially in the first month or two of the new year. And so our sights are set on this C3.ai stock. And, there is another one too, IoT. I really like the ticker symbol, stands for Internet of Things. Samsara is the ticker symbol. It is near its actually, I think it's at an all-time high here. Yeah, it is. Coming off of a fresh all-time high that was registered last week. Again, not a lot of history in this stock, but I do like its various characteristics, namely the relative strength. I like how it's close to its all-time high, and it's consolidating above a former resistance turn support zone. So this is all constructive price action. That doesn't mean that we go out and buy these today, but it does mean that we continue to watch them and look for signs of a breakout. If you want to know more, the best place to know when and where we plan on buying is in the TheoTRADE chat room. So now I want to take a look at cryptocurrency because we've seen Bitcoin and Ethereum generally continue to consolidate near the highs of their recent moves. So as a rule, consolidations near the highs of a move are considered to be bullish price action. And I have been of the persuasion in recent weeks that all of the easy money in Bitcoin especially has been made. We are getting late in some important cycles that suggest that even though there could be some more immediate upside, we are running the risk of a substantial pullback in the coming months. So, keep in mind that, the price of Bitcoin has almost, not quite, but almost doubled since its low back in September. And so now it's, everyone's on the parade for, being a Bitcoin bull. Fortunately, we're not hearing all that much of the phrases like to the moon and Lambros and have fun staying poor, that kind of stuff. And that's a good sign, because if we start hearing that, then I think it's a cautionary signal that we could see a more substantial pullback. But I still am a crypto bull with the understanding that upside could be limited in the near term. But I am a bit more optimistic on the state of Ethereum. I think its cycle labeling breakdown is a bit more conducive to higher rally, or a more aggressive rally compared to Bitcoin in the near term. And, we've been all over this move in chat for quite some time. We've been talking about how, I think that crypto has turned into a really good barometer for risk appetite for the overall market overall. And if we are going to see stocks pull back substantially at any point in the coming months, I would look for crypto to actually lead during that pullback. In other words, I would look for crypto to roll over first before stocks do. Now, crypto is not a flight to safety, asset class by any means of the word or the phrase. Like I said, it's a good risk on, risk off barometer. So, some of the names that we've been all over in chat, MicroStrategy, have been in this one for a couple months. It continues to reward us. Coinbase, making a new high. We are close to our initial upside target in the 175 area. So Coinbase continuing to do what we want it to. Marathon Digital Holdings, an absolute beast. That seems to be breaking out from another saucer formation, but we've been in this one for at least a month already. And have a really good risk reward profile as it continues to make new highs. And I still think there is more upside. Riot Blockchain, or Riot Platforms, I guess is now what it's called, lagging Mara a little bit, but I still think it'll play catch up. But the point I want to make is that not all of these crypto stocks are behaving similarly. We saw MicroStrategy and Coinbase kind of lead the rally higher, and then Mara started to follow. Then MicroStrategy and Coinbase have kind of paused. But now we're seeing Riot lag. So, that's something to keep in mind, that, just because crypto is going up doesn't mean that every stock associated with crypto will follow. So again, focus on relative strength, focus on the ones that are displaying the most bullish price action. Last but certainly not least, I want to take a look at precious metals. Gold and silver seeing a nice rebound here today. Gold obviously broke to a new all-time high a couple of weeks back, and we haven't really seen the gold bug celebrating that aggressively just yet. I do think there is more upside in precious metals. My target for gold is really in the $2,500, $3,000 area, so it's really not that much higher than current prices. That said, I think there is some tremendous opportunity in some of the mining names that we've been in and continue to follow very closely. But before I look at those, let's take a look at silver, because silver is up today, showing some outperformance relative to gold, which is really important when it comes to a bull market in precious metals. We want to see silver outperform on a percentage basis, even though it's more common to see gold lead on a technical basis. On a percentage basis, we do like to see silver outperform. So some of the names that we've been in and continue to hold: Kinross Gold. I usually don't trade stocks with lower prices, but Kinross was kind of an exception, and fortunately it is working. It did just rally to a new multi-month high last week. We are also in Alamos Gold. I like this one because it's a little bit of a higher price security. Remember, if the stock is trading, if it's a penny stock, it's a penny stock for a reason. Price reflects supply and demand, and if a stock is low price, it means there's very low demand or way too much supply. So I still like AGI. And last but certainly not least, Eldorado Gold, a little bit more of a namesake play in the precious metal space. I especially like how we completed higher lows recently during the pullback in spot metals over the last couple of weeks. We noted the relative strength that these stocks continue to display. And if you compare them to names like, Newmont, some of these legacy mining stocks that have much larger portfolios and mining assets, the names that we just looked at, AGI, EGO, and KGC, are much stronger technically than some of these names like Barrick Gold or Newmont. So that's something to keep in mind. Again, a big theme of today's video that I want you to take away from is relative strength. And we want to be long the strongest stocks in the strongest sectors. And if we're short, we want to be short the weakest stocks in the weakest sectors. And right now, aside from technology, some of the sectors that are displaying some notable relative strength include AI-related names, which is really a subset of tech. So that's kind of our niche play within that space. Crypto continues to produce a lot of alpha, and even precious metals. In the long run, I always view precious metals as you have, long-term core holdings, and then you have short-term speculative plays. But we are starting to see some, short-term speculative fervor in precious metals. I don't know how much more immediate upside there is in the short term for precious metals, especially gold. I'm a little more constructive on silver, but the big takeaway that I want you to have from today is that it's still showing relative strength against stocks, and that shouldn't be ignored. And that pretty much concludes everything that I wanted to discuss for today's video on the 19th of December. So don't slip up on your rules as we go into year end. We only have a few full trading sessions left in 2023, and I hope that it's been a fruitful year for you and looking to make 2024 an even better year. So we'll see you in chat, Theo traders. Until next time.